morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. It's Monday, June 16th, 2014. This is Butch Shorak. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We are not a service that tells you what to trade. We are not implying or guaranteeing any profit, and as always, do not trade with stocks or with money that you cannot afford to lose. Looking at the economics coming up for the next week, let's take a look and see exactly what we got going on. Very little happening on Monday. Empire State Manufacturing Survey at 8:30. And Housing Market Index coming out at 10 o'clock. And then, of course, we have the biggie for the week. We have the FOMC meeting beginning Tuesday morning. And with that in mind, we know that this certainly can affect the market. Then let's take a look and see Consumer Price Index at 8:30. Housing starts at 8:30 on Tuesday. So Tuesday's got a bit happening as we open up that FOMC meeting. And then looking at Wednesday, we see that we have the FOMC meeting announcement coming out at 2 o'clock. And of course, that is something that could change the entire market. Not expecting much coming out at this particular point, but one never knows. It certainly provides a little bit of doubt for the market. And as we see, we're in the midst of a bit of a pullback. Jobless claims come out Thursday morning, as they do every Thursday morning at 8:30. And so with that thought, we'll see exactly what happened in the last week as far as jobs are concerned. The Philly Fed's coming out on at 10 o'clock on Thursday, and economic leading indicators for our previous month coming out. And, of course, to add to the week, we've got quadruple weekend coming, which can certainly add some volatility to the market. So, in summary, the week does have some things that can certainly make the market move, with quadruple witching and with Fed coming out and doing what the Fed does. With that thought in mind, let's take a look at the SPX, and we see that we've still continued in our uptrend. We began the week at market highs of all time, and we see the uptrend continuing with the 30-day moving average above the 50-day moving average, above the 200-day moving average, and we certainly were a bit extended at the beginning of the week away from our moving averages. Remember, all things return to the mean, and that's exactly what we saw happen during this last week as we saw that market return toward the mean. We had some support at 1925. That is our first spot where we received some support. We'll see whether we continue on up during this week or whether we continue on down, returning to that 30 or 50-day moving average. Looking at the week a little closer, we see that on Monday we had an all-time market high, and then Tuesday we began a little bit of a stall. And we didn't quite make that 1960, and we see we pulled back, bigger pullback day on Thursday, inside day on Friday, which means a total lack of commitment as to where we're going, and again a bit away from that 30-day moving average. Did have support stacking up at that 1925, which is exactly what held it there from a couple weeks ago, and we see that we do have support again down at 1910. With the Fed coming out this week, it certainly could cause this market to stall out at this particular level before it moves higher. Then looking at the Dow, we see that we talked about the Dow hitting 17,000. Didn't quite make it. Continued to look very much like the S&P. Again, 30 above the 50, above the 200. Certainly an uptrend is in place. And we're having what would be a normal pullback, and what more reason for it to pull back than with the big move we had up that continued for almost 2 weeks, and then we see we pull back to our moving averages, or at least some level of support. We'll see whether this level of support holds or whether we pull back down. Don't be a bit surprised. We're going to see 17,000 the way things look this summer. Next, looking at the NASDAQ. NASDAQ is showing a bit more strength as we don't see quite as big a pullback. Long way away from the 30-day moving average. Had our 30 cross over our 50 a couple weeks ago. And we see that we're showing good strength in the NASDAQ as it was one of the leaders to the downside. So showing good strength this summer out of our tech index. And now finally the one that was the worst of all of them, the Russell 2000, had the biggest pullback, almost pulled back into a 10% pullback, and we see that it did pull back with the market during the week, and a little bigger moves out of Russell 2000. This can be a predecessor as to where the market's going to go, so keep a close eye on this. If this starts heading up, so will everything else. And finally, what kind of volatility do we have in the market? What kind of fear do we have in the market? Well, let's look at our favorite indicator, the VIX, and see exactly where we're at. So we see we had a pullback in the market, and we're all the way up to 12 with the VIX, which in many markets is a low for the VIX. So this contrarian indicator tells us that there's not a great deal of fear taking place right now in this market. Looking at some of our other sectors, TLT, our ETF for bonds, we see that it pulled back to that 50-day moving average. We're getting a bounce now. As the market pulled back, we might see a little bit more bounce if the market pulls back a little further during this quadruple witching week. Next, let's take a look at gold. We skipped that, so let's go back and pull back gold back up. There we go. Gold had quite a pullback down to that 120 level, had a bit of a bounce as there's a little bit more movement into gold. Certainly have a lot of resistance up there at about 125. It'll take some major news to move gold up through that particular area. And with what kind of volume did we have during the last week? Well, we'll look at our ETF, our Spider, and see that we're basically looking at summer doldrums average volume, which is much less than what we saw during the winter, as we're in the summer months, which certainly don't have the same amount of volume that we see during the best 6 months of the year. Remember, we're in the worst 6 months of the year, but certainly had a nice move up in the market during the last month. Now, finally, looking at financials, looks just like the S&P, pulled back away from those highs that it had, and showing us what would be normal market movements. One certainly can look at all of these things on these bullish stocks as opportunities to get back in. This is the lull that lets you get back in at a lower level. What happened to oil? Boom, shot up. Iraq, can you say it again? News conquers all when it comes to oil. So that's exactly what we saw conquer this, as we saw the oil move up out of fear of what's going on in the Middle East. So for those of you gold members, stick around. We'll look at our stocks to watch. Had quite a week in the market. Oil shot up and popped out of sight on international news. And meanwhile, we had a bit of a pullback, giving you an opportunity to get in at a lower level. For those of you that like to see more free videos, go to www.optionsuniversity.com/free gold. And for you that are gold members, stick around and we'll talk about our stocks to watch. With that thought, thank you for spending your time with us at Market Forecast, brought to you by Options University. This is Butch Shorak. It's Monday, June 16th, 2014. Already 2 full weeks into summertime. And thank you for being here.